Thank you for joining me. I'm Alex, and I want to talk about AutoZone. So, what they do is retail mostly, and it's just auto parts, mostly oil, fluids, everything. So, current price $1,248, which gives them a market cap of $28.4 billion. There's currently no dividend, and I don't expect that to change, especially because of the choices they're making that I don't quite agree with. Revenue $12.6 billion, earnings $1.7 billion, and their current PE is 16 with a forward PE of also 16. Forward PE is slightly lower, which is a good thing, but obviously no significant difference. Total assets $14.4 billion, total liabilities $15.3 billion, which gives them a negative stockholders' equity of $878 million. Which is a lot better than it was the previous year, but again, choices I don't agree with. Risk factors, obviously electric cars don't need oil changes, don't need brake pads, so there's a lot of maintenance that is just not required, and so the more electric cars gain in market share, the worse it's going to get for companies like AutoZone or O'Reilly or whatever else. So as far as choices I don't agree with, stock buybacks when the balance sheet is already negative. The 1.7 billion they had in the previous year was pretty much consistent with the years before that. And again, continuing to be negative when they have earnings of $1.7 billion, definitely don't agree with that. Other risk factors, e-commerce kind of taking market share away from brick and mortar businesses is obviously also a problem. But overall, I don't think that's as big as, general stores. So overall, I don't think the risk factors beyond electric cars are going to change a whole lot in the future. But electric cars or hybrids, marginally, because they still have an engine that needs maintenance, is going to be a pretty big part here. Overall, obviously, dividend investors are out. Growth investors, there's not really a lot of growth here. For a value investor, the balance sheet is just going to be a huge problem, and it continues to be a huge problem, even though the negative equity is kind of man-made. So I don't know if people can overlook that. PE is decent, earnings are decent, obviously. So the balance sheet is pretty much the only thing standing in your way if you're a value investor. But I, for one, don't agree with stock buybacks with a negative balance sheet, so I'm going to have to pass on this stock. That's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.